Okay, so John O'Brien, and this is Money and Wealth on the Black Effect Network podcast series on iHeartRadio. I'm an entrepreneur and a business owner, and I'm going to break something down that people, I'm sure, are just curious about. Most people are just too ashamed to say, I don't know. I don't understand the difference between a for-profit corporation and a non-profit entity. And the rules that apply to that. I just talked to a very sophisticated, very successful friend recently and had to really advise him to separate his for-profit and non-profit activities, that you don't own the non-profit. I'm getting ahead of myself. But you're going to go to jail if you keep doing, it doesn't matter if you have good intentions. If you're mixing and mingling your for-profit and your non-profit entity, the story's going to end badly. I realized after talking to this very sophisticated, very successful person who was about to make a really bad mistake, I realized that I had to really lay out in some detail and very very simply, the basics of corporate structure. This is one of these things of how stuff works, right? And there's no shame in your game. There's no reason why you should be feeling bad because you don't understand this. Who taught you? Who taught you how this stuff works? As you heard me say before, the Freedmen's Bank of 1865, Abraham Lincoln's bank, chartered to teach free slaves about money, did not last. And a guy named Henry Cook became a crook and took advantage of it and stole everybody's money, about $3 million in 1865 terms, and caused the bank with 70,000 depositors, I believe. 5-ish after Lincoln's assassination, he went in and took $3 million of money that wasn't his. White man, and well-connected politically white man in Washington, D.C. Could have been of any race, but in this particular case, it was a Caucasian man trying to run a bank that was chartered to teach black slaves, formerly enslaved people, about money. Made it sort of a double insult. And he robbed the folks of $3 million. The bank went bust. Frederick Douglass tried to run the bank and tried to keep it alive with even an investment of his own money. It failed on his watch. That's another video for another time, another podcast for another time. But interestingly enough, that was a corporation. People thought it was a government. It wasn't. It was a privately chartered bank that had a state charter for the District of Columbia, which the district is not technically a state, but you get what I'm saying. It was chartered for the District of Columbia, and because the board of directors, it appears, were financially illiterate or corrupt or both, and the board of directors was a group of mainstream, i.e. white overseers. So this, you can be successful and still be successful and mainstream and top of the mark and still miss everything around the facts. These folks ran this state chartered bank as if it was a national bank. It had offices ultimately in, I think it was 17 states, 38 offices, if I have that right by memory. But it really was not like, and it was sort of, the inference was that it was a government bank. It wasn't. It was a bank that was not insured by the federal government. It was inspired by the federal government and chartered by Congress, but not licensed in several states, and not backed by, as banks are today, the full faith and credit of the federal government through the FDIC and FDIC insurance. Let me know, by the way, if you want me to break down these bank terms and all these fancy terms, and I'll do that as a separate podcast. So let me tell you about the 6 type of corporate entities. And I don't care what your education level, your income level, your exposure level, don't feel bad if you're sitting there with a piece of paper. I didn't know what I'm about to tell you. I had to figure it out as I went, and I now have had hundreds of corporate entities, and I'll tell you why. As an entrepreneur, I've had hundreds of corporate entities, even though I've only created about 50 businesses recently, like real businesses, but I've had hundreds of entities, so that should strike you as odd. I'll explain to you how and why in this special podcast series. Tell your friends to come up to the radio or talk to your phone and pull up a chair or sit on the couch or sit on the porch, pull out your pad and paper and write this down because this is how we learn. God gave you, as Quincy Jones told me, God gave you 2 ears and 1 mouth. So you listen twice as much as you talk. It's time to be nosy about everything. Another Quincy Jones quote, learn, learn, learn. It's time to figure this out. There's a difference between business and busyness. So corporate entity, corporate approach, corporate entity number 1, write this down now, is a sole proprietor. This is what most people do. So there's about, last time I checked, 30 plus million corporations in America. I mean, like real businesses, operating entities. About 10% of that, so 3.1 million, are African American businesses, and 96% of those are sole proprietorships, which means you don't have any employees. I call it a self-employment project. So the simplest form of business is a sole proprietorship, and it's owned and operated by one person. There is no distribution between the business and the owner because it's the same thing. And all profits and liabilities are personally attributed to the owner. And that's why I obsess on your credit score, because you're going to get in a sole proprietorship your credit. And the word credit comes from the Latin root word credito, which means credibility. So credit has nothing to do with money. And the word capital comes from the Latin root word so the words capital, yes, capitalism, comes from the Latin root word capitas, knowledge in the head, okay? And bank's a trust business. So get back to this. Credibility, your credit comes from a sole proprietorship, from your personal credibility, which is why your personal credit score is so vitally important, because you're going to be accessing, in all likelihood, capital or access to capital through your personal financial profile, not your business profile. Or put another way, your business profile with a sole proprietorship is in all likelihood your personal profile. So your personal balance sheet, your personal income statement, where do you make your money, where are your assets, your personal liabilities, how do you pay your bills, are all reflections, or will be reflected upon how much opportunity that business gets until the business grows in size, in space. So most black businesses, 96% are sole proprietorships, no employees, which we need to change, by the way, because you make money during the day, and hopefully you start to finish the sentences that I'm telling you now. You make money during the day, but as my friend Tony Ressler reminded me, 200th richest man in the world, you build wealth in your sleep. Okay, so number 1, sole proprietorships. Number 2, partnerships. This involves 2 or more people who agree to share the profits or losses of a business, and there are several kinds of partnerships. There's a general partnership, often referred to as a GP. I'm involved with several general partnerships. Each partner is equally involved in the operation in the business and equally liable for debts. By the way, except unless you have a side agreement. I'm involved. So I had a business. One of my businesses I sold. I was the principal owner. I was the general partner, and I had limited partners. And at closing, I was 100% owner of the entity. But when I sold it into a joint venture entity, I ended up with new partners, and we all became general partners in the new entity, where I am the largest shareholder amongst other shareholders. But I can't just make decisions on my own like I did before, because a camel is a sort of a horse designed by committee. You have several voices that you've got to respect. So general partnerships are a very common term, and I want you to understand when people say GP, that's what they mean, shorthand for general partnership. Limited partnerships includes both general partners who manage the business and have unlimited liability, and limited partners who are investors with limited liability. Really important distinction here, that if you go into a business with somebody They want you to invest. If they're operating the business and you are running your dental office or running your brokerage firm, or you are a nurse or you are a teacher, you have an occupation, but you have some investable money, funds that you can invest into an enterprise. You, in all likelihood, are a limited partner. In all likelihood, they are the general partner. They're responsible. They have unlimited liability, as it should be. They're going to get a return for their sweat equity, if you will, their energy, and they're responsible for making this thing successful. And you're sort of along for the ride, but because you're not running that business, you shouldn't have complete liability. That's why you should have limited liability, and your liability, in my opinion, should be limited to the money that you put into the enterprise. With all this stuff, you want to get your own legal counsel and an accountant to sort of look over this stuff before you sign on anybody's dotted line. Limited liability partnerships, LLPs, not to be confused with an LLC. That's my favorite entity. I'll come to that in a minute. A limited liability partnership is similar to an LP, but it offers all partners protection from certain liabilities and debts. Okay, we made it to number 2 in the structure of corporations. I hope the pen or the iPad or the iPhone or the digital note-taking app is really going here, because this is really important stuff when you're structuring your business. You got to get this right. Number 3, corporations includes a C Corp. Now, this is probably the most common error, is to assume all corporations, once you get into the corporate structure, are the same. They're not. There's a C Corp. It is the first one I'm going to describe, and it's a complex business structure with shareholders, directors, and a director is a board member, and officers. The military. An officer of the corporation is somebody who runs the company. In the prior example, it would have been the general partner. So officers are people who hold an office. So the president, the CEO, the chief financial officer, the chief administrative officer, chief technology officer, general counsel, et cetera, et cetera. These are officers, but they may not be, and in all likelihood, will not be board members. Okay, hello, and probably are not, well, they may be shareholders, depending on what kind of compensation agreement they have. But the C corporation is the first level of a true entity that is its own person. Okay, now, I hope I'm not freaking you out now, but a corporation is a person. It's not a breathing human being, but it is a person. It is treated as, it has a personality, it has a identity, it has it breathes, not human breaths, but it breathes. In fact, the first structure in America was not government, it was a corporation. That's what started America, was trading corporations, which ultimately ended up trading slaves, by the way, a whole nother conversation. But they traded, grain and all kinds of other things. But these trading posts, these trading corporations, were the first entities, and that's where we got our governance from. Our government structures is that you would take votes, and you would have opinions, and you would have interests that would need to be protected, intellectual property rights. Well, back then it was just individual property rights. That was where it all came from. So America, that's why I keep saying America is a capitalist democracy. Back to the structure. Okay, so the third structure, I've covered number 1, sole proprietorship, write that down. I covered number 2, partnerships, write that down. I then went into the sub-partnership structures. Then I just now have covered, or I'm covering structure number 3, corporations, C Corp. A complex business structure with shareholders, directors, and officers. It is legally separate from its owners, providing limited liability protection, and has an independent life separate from its shareholders. Remember now I said to you, it is a living entity. It's sort of a freaky thing to think about, but a corporation has life and has, rights. That's right. corporations have their own, you want to call it, civil rights. Isn't that deep? All right, corporation number 4 is an S corporation. This is the one you probably heard the most about. An S corp, for in shorthand, is similar to a C corp, but designed for smaller businesses. So a C corp is really, Fortune 500 companies. A lot of them are C corps. Okay, we have not got to my favorite structure yet, so hold on. But an S corp is really a big business for small business. And it's similar to a C corp, but designed for smaller businesses. Profit and losses can be passed through to shareholders, personal tax returns, avoiding double taxation. It has restrictions on the number of shareholders. So see there, it's similar to a C corp, but the S corp has the ability to sort of slide an entity inside of an entity. It's sort of like a parent and the child living the child being in the womb. Okay, it's getting a little freaky, so maybe I shouldn't say that. But this is less of a totally, big, bulky, strong, structured entity as the C corp is. It still has a lot of the features, but you can pass through with an S corp. You can pass through some of the profits and loss benefits directly to shareholders. Personal tax returns, making it easier to file taxes and all that kind of stuff. And again, avoiding double taxation. If you have a C corporation, it has a life, and it has a tax life, and everybody else has a life, it has a tax life. So you may be paying double taxes in that situation, but you're making so much money in that situation, nobody cares. But it does have a restriction on the number of shareholders and all that kind of stuff, this S corp, because it wasn't designed to be this big, hairy, audacious thing. Okay, number 5 is probably my favorite structure. You might be surprised, because number 6 is the nonprofit corporate structure. That is not my favorite, but it is probably the most interesting. And I've run, by the way, all of these in my business life, and I do so in many cases today. And again, I still have explained to you why I have hundreds of corporate entities, and I'll explain that because that's sort of interesting and fascinating. The number 5 is a limited liability corporation, an LLC, my absolute fan favorite. It combines the limited liability protection of a corporation with the tax benefits and operational flexibility of a partnership. Hello. It's very nimble. Owners are called members, and profits and losses can be passed through to their personal tax returns. See how elegant that is? And I love an LLC for many, 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 many reasons, not least of which you can wrap an LLC around almost anything. And it's perfect for, in my opinion, a single investment property. And so why have I had hundreds of LLCs in my business life, even though I only actually started and founded technically about 50 corporate entities in my mature business life? Because one of my businesses was a real estate business, meaning I built a business from zero to $121 million, or 100 to almost $200 million, but I sold it for $121 million in 2020, Christmas Eve 2021. That's the Promise Homes Company. And we own just under 700 single family rental homes. By the way, we sold it into a new joint venture entity where I'm also a shareholder with my new partners, where we are GPs in the new entity, and I own a significant interest in the new partnerships. Have I lost you? Let me go back. So I had this entity that I owned as a general partner, the sole general partner for a period of time. And it became a joint venture, but let's stay focused on the relevancy of an LLC here. And I own 700 homes, just under 700 homes. I was, and I believe still remain, the largest minority owner of single family rental homes in America. and it worth a couple $100 million at some point, and sold the principal part of the company into a joint venture, for which I'm now part of that joint venture. But at the time when I owned the company, I had to protect myself because these were separate in assets sprinkled all over a region of the country. And if I had just a single family, if I just had a multi-family apartment building that I owned, there'd be 2 or 3 LLCs. Let's say it's a 300 unit apartment building, just for the sake of conversation. Maybe there's a maintenance company, a management or maintenance company within that would have been an LLC. Maybe there'd be a little cafe or restaurant within the apartment building, that being its own limited liability corporation. Maybe there was a janitorial service, that would be its own limited liability corporation. So there'd be businesses within businesses, and that would be set up as its own limited liability corporation, so that what happened in the restaurant didn't make you liable as the owner of the apartment building. You may have had other investors in the apartment building, had nothing to do with the restaurant. What happened in the management company might be separate investors, and the owners of the apartment building or the restaurant shouldn't be held liable for what the property management company does, even though it's all part of a central investment. So that's why you might have, in that example, limited liability corporations. I had hundreds of entities because I would buy sometimes one home at a time. Then it would be a separate LLC. I might buy 25 or 100 homes at a time through portfolio acquisitions. Write that down. Portfolio acquisitions. A purchase of a portfolio of homes. All right. You have an investment portfolio in your stock account, maybe. You have an investment portfolio in your mutual fund account, maybe. Well, I had an investment portfolio of homes that I'd buy, and I might buy those as separate entities, separate homes, or as a bucket in one LLC, right? Because maybe we're on the same block or whatever, protected by that one LLC. Or I might have 25 LLCs. I remember sitting in several offices across the country, having to sign, hundreds of grant deeds, trust deeds, and mortgages, individual transactions for all these individual homes and LLCs tied to same limited liability corporations. So that's why, even though I only have 50 or 60 businesses that I stood up in my adult life, including my nonprofit businesses, by the way. But I had hundreds of limited liability corporations that I had at one time for that reason, because I had these individual assets that had to have a life, protections, investments, ins and outs. But whatever happened to that property stayed in that property. You couldn't trip and fall that property and then try to punch through that and get to me or my partners to try to sue us for $1 zillion just because, John Hope Bryant owns that, so I'm coming after, even though I just, my toe cost me, $1,000 to get bandaged up. I'm going to go after, $500 million, whatever the number is, because, I can just sue him until the chicken's roost, or the end of time. No, limited liability corporations are exactly as they sound. They limit the liability of the asset owner. Okay, so now let's go to so that was a fifth entity. That's my favorite, the LLC, and it's the most flexible. It's the most, I think, useful. It's fairly inexpensive to get into. It's typically a couple pages. It is very elegant. It's very flexible. I've already mentioned that, and it has a lot of usefulness in uses. The sixth kind of corporation is a nonprofit corporation, and most of you know me from that vantage point. It is my nonprofit, my lead one, although I have several nonprofits. Operation Hope, which is the largest financial literacy coaching organization in America. 300 offices serving 1,000 locations in 40 plus states, with hundreds of funded and thousands of nonprofit partners. We've been in 4,000 schools. We've invested through our operation over $4.5 billion, channeling our partners' capital in underserved communities, as you can tell from me talking about it. I'm so proud of it. But that's a 501c3 nonprofit corporation. Now, this is really important. By the way, there's a John Hope Bryant and Shater Bryant Family Foundation. That's not what it's called, but that's the function of it is. There are other nonprofits that have funds for my mother, Juanita Smith, God rest her soul, and Johnny Will Smith funds that come through the Family Foundation. As people pass on, we create entities to honor them, and that goes through the Family Foundation. That's separate from the nonprofit Operation Hope, okay? And also Operation Hope has nothing to do with my for-profit activities at Bryant Group Ventures. You have to keep these things separate unless you want to go to jail. You cannot mix these things together. So this is a really important point now. A nonprofit is a corporation. Yes, it is. It is a corporation like any other corporation, right? Organized for public or charitable purposes. These entities don't pay income tax on money they earn related to their nonprofit purpose. They must adhere to specific management and reporting requirements. But please know, a nonprofit corporation is a corporation, okay? It has shareholders. The shareholder is the American public. It's not private shareholders. You don't own it. I control Operation Hope. I founded it as long as I'm operating it ethically and within the limits of the law. And I don't. 4 is an S corporation. Number 5 is an LLC. My favorite structure of doing something in business because of it's so flexible and has so many things you can do with it, and it's inexpensive and it's easy to start, and you can wrap a lot of things around it, and it applies to most every place. And then, of course, the most noble of them is the nonprofit corporation, which is still a corporation. It's just the public is the shareholder, and I think you have a heightened responsibility. In fact, if you're running a nonprofit, you're running a public entity. It's like going public on Wall Street, all right? Okay, so that's that, and I hope you've enjoyed this. This is John Hope Bryant. And this is the Money and Wealth series on the Black Effect Network. This is my podcast on the 6 types of corporate entities and the hundreds of entities that corporate entities I have run, almost 1,000 entities actually, and the purpose and reasons for each one of them. And hopefully you took a lot of notes, and hopefully you're smarter as a result of it. Let's make smart sexy. We've been making dumb sexy for way too long. We've dumbed down and celebrated. It's time to make smart sexy again. I'm out.